But the reality is most people get into trading in the first place because they have money problems. They're like, I'm in debt, I'm struggling, my job's not enough, so let me look towards trading. So they're already a step behind. They're already starting from a weaker place than someone that's not in debt or someone that has a 100k buffer to play with, because they're not going to chase it. Where this guy's maybe thinking trading is going to help me pay rent. When you're in that very extreme position, I don't know if you've had that same experience at some point, but what words of advice would you give to someone that's already having that uphill battle?
Okay, so this is what I would say, right? So if you are in a tight position and you don't have much money, let's say you have $5,000, right? And you're in a position where you say, okay, this is my last $5,000. If I lose it, then I'm broke. But the way that I see it is, even if you turn 5 to 25, you're still broke. You turn 5 to 50, you can't maneuver much, right? Even 5 to 100, you still have a long way to go. So the way that I look at it is, in the market, there's opportunities where you see mass panic in the market, or mass euphoria. And these inflection points present the absolute best opportunities to trade options, where you can catch 1,000, 2,000, 3,000% gainers if you time it right. So why not wait for these moments where you see the mass panic, buy an option, whether it's SPX or an individual stock, and wait until either the market bottoms or it tops out, and then just throw the $5,000 in, where you can go, you can flip it to 5 to 50, 5 to 100, 5 to 200 in one go. It's kind of a risky way, but you have to realize that even if you have $5,000, 5,000 and zero is not much of a difference. So in order for you to get out of your situation, you have to take a risk. There is no $500 a week on a $5,000 account. It doesn't exist, right? So that's how I did it. Is I waited for these big inflection points in the market. I started with $6,000, but I understood that in order for me to really grow an account, this is the only way.
Just to let's help explore this idea. When there is mass euphoria or mass panic or pain in the market, this is usually a very aggressive or very obvious trend. So how do you, now you're reversing what you're catching a falling knife in this case. How do you do that from a smart way, or a way that is like, okay, I've got technicals backing me, I've got something backing me, not just like throwing it in and hoping for the best? What would you look for in this kind of scenario of extremes?
Okay, that's a good question. So I'll give you kind of a real life example right now. So April this year, the S&P, it dropped to 4,800, right? And now we just touched 6,700. So we've had over 40% gain, I believe, in 5 months, right? The NASDAQ is up 50%, almost 50% in 5 months. And if you look at the history of the stock market, anytime you've seen a gain that big in a short period of time, it's a pullback is coming. So from a macro standpoint, you have to understand that 50% gain in an index, at least you'll see a 10% pullback, right? And then you dive into the technicals. Okay, what are the levels? Where are we at? And you have one level where this year, before the tariffs were announced, SPX was at 61.50, right? So right now we're up almost 40, between 40 and 50% between the S&P and the NASDAQ. How much more can we go, right? And we're starting to see some weakness the past 2 days. So if the round numbers break, the market loves these psychological numbers, these levels, where 6,600 is a level, 6,700 is a level. And if it starts to break with a catalyst, right, meaning what type of news is coming? Does anyone know what the news is? No one knows. But you'll see the market act much different, meaning you might see 100, 150 point red day in the S&P. And that's your first sign of, okay, the trend has changed with a catalyst, which is the news. And once that occurs, if you try to catch that knife, you're going to get smoked. So that's how I would look at the market, is look at it from the macro, understand the technicals. And then the very last one is when you see very normal trade, like retail traders, average traders, all on the same side, meaning, okay, it's very bullish, it's going to keep going higher, it's going to keep going higher. You have to fade the public, right? You have to go contrary to what everyone else is thinking.
I spoke to a trader, a market wizard, not too long ago, and he had exactly this strategy. He was like, he's always technically counter trending because he's countering the masses, but he gave this analogy of, when something is at all time highs, who's going to keep buying to keep pushing it. If like 90% of the buyers are in through the COT report, if there's all of this, lopsided behavior, for it to keep going, more people need to get in. And where are those people? So he was like, at some point it's got to break. And he did the same thing. He was like, ironically, on positive news, you might have that break. And then he has maybe his technical structures, but I was like, oh, that's a pretty non-contrarian, but it works. Because like then you have all the risk reward, then you have the momentum on your side because people will panic get out. And it was an interesting view, and he's been doing it for multiple decades. Is this your bread and butter strategy, or is this like a specific use case?
I would say it's one of my biggest ones. Yeah, like I would say 80% of the profit I make is from these type of trades. And the way I try to look at the market is, it's kind of like either, like soccer or baseball, where you have a regular season and then you have the playoffs and the championship. Normal days are the regular season. You're not going to swing for the fences every day. But in certain markets, in certain market conditions, there's going to be this big opportunity, and you have to be ready for it. And during the regular season, you're prepping for that, right? You're taking what you can from the market.
Okay.
Might win and lose a little here and there. But when this holy grail like is presented to you, most people aren't ready because they don't know what to look for. But seasoned traders are waiting and waiting and waiting for this. And if you're an aggressive trader, that's where you make most of your money.
So would you argue, would you say that over your 14-year career that you would have majority of your gains in the year from a small window of time?
Yeah. I would say in a given year, there's probably about 8 to 10 weeks, 8 to 12 weeks of really good market conditions. All the other weeks are just, you take what you can, maybe 1 or 2 stocks run during the week, but strong momentum, I would say between 8 and 12 weeks. And that's where most of the money is going to be made.
So I guess the hard part is knowing when are those weeks going to be. So what are the telltale signature signs? Is it just mass euphoria, mass pain?
Though that's one category. Another one is based around news, like different catalysts, right? So obviously you have the Fed meetings, right? They don't happen every single month, but the months that they do, you're always going to trade around those. Meaning, you let Powell, you let the interest rate decision happen, let Powell talk, wait for the reaction, and then you trade it. Versus most people will place a bet before and hope that it goes in that direction. But the real money is made afterwards, where that will set the trend for the next week or 2 weeks. So
super interesting. And from a technical perspective, are you using any indicators? Are you using market structure? What are the telltale signs for your strategy?
So I don't use any indicators. When I first started, I did, but as I got more experience, I kind of leaned a lot more into support and resistance.
Oh,
yeah, just simple horizontal lines on the chart. And
are you doing anything different to identify your key levels that maybe others wouldn't be, or is it the typical support and resistance people are used to?
It's very simple levels. Like there's no secret behind it. Anyone can find it on a chart, but the hard part about it is just waiting for it.